I want to start with the worst case scenario, something that most analysts are saying isn't really likely. Let's say there is a complete disruption to Iranian oil supply and a closure of the Strait of Hormuz. How high does the oil price rise?
Morning. Yeah, I think fair to say that's not a base case. But if you're talking about really extreme scenarios, we've considered a case where even if only very temporarily oil prices could get, for example, above $200 a barrel. If you're just looking at historic relationships of the sensitivity in changing price versus the amount of supply that could be disrupted in that scenario. But I would stress that neither is that, as I say, a base case, nor is that something that inherently would be very sustainable if it were to occur.
So what is your base case at the moment? What scenario do the current moves suggest to you the market thinks is likely?
So our base case is that you're probably going to push a little bit higher than we have already in terms of the amount of risk premium that's being priced in. And that means getting up into the low 80s for Brent. But then we kind of get to a point where the market scenarios become a little bit bifurcated. If we look, say, over the next 2 weeks, do we go into a scenario where you get some form of de-escalation, perhaps with the US getting involved on the diplomatic side, or do you actually find that, for example, Israeli attacks on Iranian energy infrastructure lead us to a route where we do get, rather than just a risk premium being put in, actual disruptions to oil supply? And if you're in that latter case, then we're probably talking about the price pushing up towards $100 as you put also further risk premium in on greater losses, versus if you go into a de-escalation scenario, while clearly there would still be a significant risk in the market, you could then look at over time that risk premium bleeding out, as we've seen with obviously less dramatic, but still plenty of other geopolitical risk events over the last few years, where you get this initial spike, but then that risk premium decays out as you don't end up suffering a meaningful disruption to actual supply volumes.